The $599 MacBook Neo, a price point rarely seen from Apple, has recently disrupted the laptop market. This aggressive entry is not just challenging competitors. It's creating a seismic shift within Apple's own product ecosystem, particularly for its high-end tablets. For years, Apple's strategy has been about premium pricing and distinct product categories. The MacBook Neo, however, blurs these lines, offering a full Mac OS experience at a price that directly undercuts some of the most advanced iPad Pro configurations. The iPad Pro, especially when equipped with the Magic Keyboard, often costs well over $1,000. The MacBook Neo, at nearly half that price, delivers a traditional computing experience without the added cost of accessories to achieve laptop-like functionality. This move highlights a shift in Apple's internal competition strategy. Historically, products like the Mac Mini and MacBook Air carved out their own spaces. The Neo, however, directly targets a segment where the iPad Pro has been positioned as a prosumer device. The iPad Pro, despite its powerful M-series chips and advanced display technology, still runs on iPad OS. While iPad OS 27 continues to add desktop-class features, it remains distinct from Mac OS, which the MacBook Neo offers natively. This strategic pricing puts immense pressure on the iPad Pro. Consumers seeking a portable, powerful Apple device for productivity now have a significantly cheaper Mac option that doesn't require adapting to a tablet-first operating system. The decision to launch the MacBook Neo at this price point aligns with a broader shift in Apple's investment philosophy. Under Tim Cook, Apple became renowned for its massive share buybacks, returning hundreds of billions to shareholders. However, with John Ternus signaling a new era, the focus is shifting. Ternus, tipped as a potential successor to Cook, is expected to prioritize direct investment in product development and market expansion, rather than just financial engineering. This new approach implies a willingness to disrupt existing product lines to capture new market segments or defend against competitors. The MacBook Neo's pricing is a clear manifestation of this strategy, a bold move to expand Mac's reach. The question is whether this internal competition will ultimately strengthen Apple's overall ecosystem by offering more compelling options at various price points, or if it will simply cannibalize higher-margin products like the iPad Pro. The success of the MacBook Neo will be measured not just in its own sales, but in its impact on the wider Apple portfolio. It's a calculated risk, betting that a lower-cost Mac will draw new users into the ecosystem, even if some come from within. The lesson here is that even dominant companies like Apple must sometimes disrupt their own successful products to stay ahead. The greatest threat often comes not from outside, but from a failure to innovate and adapt from within.